Welcome to Policy on Demand. I'm Scott McCandless. Year end means different things to different companies, but one thing that they all have in common, everybody's very busy. So here to share some insights with how to prioritize at this time of year is Margie Dhunjishah. Margie, welcome. Thank you for being with us.
Scott, thank you for having me. It's always a pleasure to be here.
Likewise. So we've talked a little bit about this ahead of time, and you said that there are essentially three buckets into which some of the year-end actions might fall as tax executives think about what they might want to focus on. So can we start with your first bucket or two?
Sure. Thanks. So 3 buckets. First bucket I'm calling last call because it's going to be the end of the year before we know it. So as companies are thinking about cash planning.
Sure.
So cash planning, you're going to think about accounting methods, attributes, foreign tax credits, R&D credits, any kind of credits you can get your hands on for cash planning before year end. I also want companies to stop and pause and think about limitations of any kind. So before you trip over a limitation, you want to know that you're doing it. So anything with the EBITDA limitation, the beat 3% base erosion test,
Sure.
and then last but not least, gains and loss offsetting. It's the last couple of weeks before year end. It's the last couple of weeks to get journal entries in. So as you're going through the last call, those are the 3 items I want people thinking about.
Gotcha.
Bucket number 2, I'm calling it the you'll thank yourself later bucket. And in those buckets, we're about to be deep into financial statements. So thinking about anything related to valuation allowances, know where you're landing, get your documentation in order, uncertain tax positions. Also, make sure they're fully analyzed, make sure they're fully documented so you don't get any surprises when you're trying to wrap up your financial statements, your effective tax rate, earning per share. And then last but not least, do it once, use it twice. I know this is always a challenge, but anytime you're doing a calculation, and if you can do it thoroughly enough that you can just roll in and use it again for the tax return so you get double mileage out of it rather than doing too high level of an estimate, which is absolutely effective for financial statement purposes, but you have a do-over for the tax return. If you can, do it once, use it twice, you'll thank yourself for that later.
It's the measure twice, cut once theory.
Exactly, Scott.
Yeah. So you mentioned last call, great name for that particular bucket, and you'll thank yourself later. You said there's a third bucket as well. I'm curious what title you have for that.
So I have the holiday season on my mind.
Sure.
So I've got the last bucket is a gift to your future self. So as we're getting close to year end and it's going to be 2023 before you know it, aligning and refining your tax data needs, particularly if your company is going through any kind of a transformation. So as your company is transforming, making sure that you have the data that you need so you can do all the knock-on calculations that are going to be necessary. So when you're thinking about getting ready for Pillar 2, when you're thinking about local country considerations, when you're thinking about book minimum tax, any kind of alternative minimum tax, making sure that you've got the data that you need to do those calculations in an efficient and effective manner. So think about your future self, think about those future challenges that you're going to have. And if you can start planning for those today, you will thank yourself later by giving yourself that kind of a gift.
So Margie, this is great insight from an internal perspective, but what about some of the external pressures, potentially recessionary pressures, certainly inflationary pressures? How do tax executives think about that, or what should they be focused on?
Excellent, Scott. So what I am encouraging is everyone to explore their optionality. Just know what levers you have available to you. So if the call for cash does come from your company, you can help deliver. So thinking about methods, credits, but I also caution with rising interest rates, be aware that some companies are going to be subject to interest expense limitations that they might not have been limited by in the past. So just be aware and take a look. If you see that you're getting close to some of those interest expense limitations, as always, looking closely your accounting methods, it's always a first place to look. And then last but not least, I've been talking with a lot of clients that as a business, they're looking at their year-end debt portfolios. And if there are going to be modifications to those debt portfolios, just know that they're coming so that you're prepared. And then back in the realm of credits, just leave no stone unturned. There are a lot of new credits out there, particularly with the Inflation Reduction Act. There's a lot of ESG style credits. So just know what's available to you. Make sure you've done your assessment. And then last but not least, tax department costs. I'm not hearing a lot of VPs of tax talk about they have so many people they don't know what to do. Usually it's the latter, in that they're a little short-staffed. So they're thinking really hard about how can they use technology, how can they use data, how can they use automation to get everything they have to get done a little bit faster and a little bit more efficiently. And they're also considering where it makes sense, strategic outsourcing. If there's a particular reporting function that just isn't core to your business, but it needs to get done because you need to comply, is there strategic outsourcing that will give your people the relief that then they can do all this complex modeling and calculating that needs to get done? So that's what I'm recommending right now.
That makes a lot of sense. Does this mean that these are some actions you can take that will set yourself up for success in 2023 as we kick that off as
Absolutely.
well?
Success in 2023 starts today.
Gotcha. Great. Terrific advice as always. Margie, thank you so much. Appreciate your insights.
Thanks, Scott.
Thank you. And to our viewers, thank you very much for watching. Stay tuned for much more insight from Washington and around the world. Take care.